Hello, welcome to the weekly technical analysis review. It's Monday, April 10th. I'm Selena Nicholas, technical analyst at xm.com. So we'll look at some major pairs as well as gold on the daily chart, and we'll start with Euro USD. You can see that downside potential remains. In fact, the short-term bias has increased, especially after prices broke below the 50-day moving average, which is the yellow line. And if we look at RSI, it's below 50, so it's now in bearish territory. The 200-day moving average, which is the purple line, it's strong resistance to the upside. And if we look to the downside now, any breaks below 1.0555 and 1.0500 would increase downside potential, with scope to target the January low of 1.03.39. The recent uptrend bias that took place from this low, and it reached 1.0905, so this recent uptrend bias has shifted to a more bearish one, especially since prices broke below the 50% Fibonacci of that uptrend. So we're slightly below this 50% Fibonacci, and we're now approaching the 61.8 Fibonacci level. So the market has retraced more than half of this uptrend now, and we're starting to look at a more bearish bias. So now let's take a look at the pound versus US dollar. As you can see, it's the pound dollar pair is very neutral. It's just been pivoting around the 50-day moving average, so that's been around 1.2400, and the range is basically between 1.21 and 1.26. So a very neutral outlook for pound dollar, both in the medium term as well as in the short term. So not really going anywhere. Let's take a look at the dollar yen. We're on the daily chart as well. While the risk is skewed to the downside, since there have been lower highs, lower lows from the peak of 118.65 in mid-December, the short term, the very short term, is neutral. Prices are basically just pivoting around the 111 level, and to the upside, resistance is 112, and to the downside, support is at 110. So if this key support level is broken, we'd see an extension of the fall from 118.65, and we'll head lower. But we need to see a clear break above at least the 1112.77 area, which is where the 50-day moving average is right now, in order to trigger a more prolonged recovery to the upside. Otherwise, any sustained trading below this 50-day moving average, which is also below the cloud, we can't see a shift in the bias. Now let's take a look at gold. So we're on the daily chart, and we could see very short term, gold is neutral, capped by the 200-day moving average. It's been horizontal for a while now, and it's acting as a very strong resistance level. It's close to the 1260 level. There was an attempt to breach this. Well, actually, prices briefly moved above this level on Friday and hit a 5-month high, but soon moved back below the moving average, and today as well we're trading below it. So a very important resistance level to the upside. And if we look at RSI, it's moving sideways, so it's indicating that the bias is pretty much sideways right now for the short term. So despite a bullish run from sub 1200 levels back in mid-March, that rally pretty much lost steam once it reached the 200-day moving average. See, there was an attempt again back in February to break this level without success, and then again towards the end of March, early April, testing this level, but extremely strong resistance. So unless there's a sustained move above this area of 1260, then only can we see a resumption of that uptrend that began back in December. But otherwise, We expect support at 1240, and of course the 50% Fibonacci of that recent uptrend is a critical level, important support just below 1200, just around that area. So anything a move below this level would start to shift the bias to a bearish one and change this bullish market structure. So thanks so much for watching, and have a great day.